Oh man, so Jerome Powell did it, a 75 basis point increase. That is a record since 1994, and you'd be understood to think that the market would be red, but no, we've got the rally because the market was expecting this. They told Jerome Powell to give us the 75 basis point increase, and now we're seeing Bitcoin U-turn. It's red day, trying to fight to get back in the green. We've seen the equity markets now in the green, giving up a 5-day slide. What is going on though? Because I've got a huge warning, because Powell did stumble through that conference. We need to go through it in detail. We need to go through the summary of economic projections, because there's some important updates in there, and then look to see what are the key levels on crypto. How will this affect us over the next few weeks? Make sure you smash up the like button. As always, guys, if you want to trade any of these moves over the next couple of weeks, do so using PRIMEXBT and BYBIT, two of my favorite exchanges. BYBIT will give you up to $4,000 in bonuses. PRIMEXBT will give you up to $7,000 in bonuses. So get yourself set up on the two platforms which I use to trade. Now, we can see in the markets that Bitcoin was initially down over 4%. That's now down 2%, sitting at 21,600. It actually ran as high as 22,000 whilst Jerome Powell was speaking. We see that the S&P and the major indices are doing really well. Dow Jones up 1%, S&P up 1.5%, and 2.5% on the NASDAQ. And the Dow snaps a 5-day losing slide, which is great. But the question is, we need to be a bit cautious, and we need to first break down what actually happened. Remember, I called this the Goldilocks FOMC meeting. If we had a 0.5 basis point rate hike, that wouldn't have been enough. And contrary to many's belief, that could have led the markets to fall in the red. I know that doesn't make sense, but the market is almost telling Jerome Powell that we want greater rate hikes, right? We saw it priced into the Fed rate monitor tool, into the futures, that they wanted 75 basis points. Now imagine this. Imagine a kid coming up to its parent and saying, "Can you discipline me, please? I've been pretty naughty," right? That's exactly what happened here in the market. Inflation was rampant, and the market even told Jerome Powell, you need to be a bit more aggressive. It's pretty damning when the market is telling you to be a bit more aggressive with your interest rate hike. So Jerome Powell did what the market said, raised the interest rates by 75 basis points, the highest since 1994. But there was a few things which didn't quite sit well with me. I mean, the first thing being that he did so quite apologetically. Now, he did mention that 75 basis points will be on the table for future meetings, but he also caveated it too often. He said in his press conference that he knows it's a large increase and that it won't be too common. I think he needs to come out more aggressive. The market isn't respecting him, and he needs to come out and command that respect. You saw the little bit of green we've got today based on it is based on the fact that he actually did it. Markets like that. Now, imagine if he came out with a bit more strength and vigor around it. The markets will come into a line much quicker when they understand he's really on top of inflation. He's not scared about the markets. He's not scared about recession. He's going to plow on ahead and get the job done regardless. Now, we also had the summary of economic projections. Really, really important. This doesn't come with every FOMC meeting, but it did come with this one. There's a few nuances I want to point out to you guys to make sure you're aware of them and the impact it can have on crypto. Now, the first one was the change in real GDP. Okay, look at this GDP figure. Now, in March, they pointed that 2022 GDP will sit at 2.8. They revised that to 1.7. They revised the 2023 from 2.2 to 1.7 and 2% to 1.9 in 2024. So you can see this is a huge reduction. And basically what they're saying is we're going to see around 2%, if not less, growth for the next 2 to 3 years. So quite a damning update here to the change in real GDP. Previously, they were a bit more buoyant, saying 2.8% in 2022. They also revised up the unemployment figures. That was currently projected at 3.5. They bumped that up to 3.7, but more noticeably, bumped it up by 0.4% in 2023 and 0.5% in 2024, suggesting inflation only going to deteriorate from here. Also worthy of note is the core PCE inflation. Previously, they thought that was going to come in at 4.1. Having now seen the CPI reading on Friday, they've upped that to 4.3 and then 2.7 and 2.33. And finally, the Fed funds rate, which they now, previously they were projecting at 1.9, which would be like their almost neutral rate, but now they've upped that to 3.4, going up to 3.8 in 2023. A big revision here. I mean, to admit you're 1.5% wrong is no mean feat, right? And you can see it's a complete bunch of revisions. Basically, the Fed have put their hands up and said, we got it wrong. We thought, by now 0.25 rate hike and a 0.5 rate hike would have led inflation to come in check. We're completely wrong, and we're going to revise. So that's the tone of the meeting. And the market are like, it's about time, mate. It's about time. You figured it out. We've been telling you for ages, and it's good that you finally had the nerve to do a 75 basis point increase. He also spoke about the fact that they'll continue to do quantitative tightening, and he wants to see the inflation figure come back down to 2%. We already know that. Worryingly, however, he did talk about the fact that a lot of things remain out of his control. I didn't like how often he mentioned that, but again, he's just trying to say, look, it's not completely down to me, inflation, okay? And look, when you're facing inflation like this, there's no, there's a reason he's trying to hide, because this is crazy. 8.6% here in the US, even though he started rate hiking. He really needs to get a move on now, and you can see why he was blaming other things. He mentioned Russia-Ukraine war. He mentioned all the supply side things, which obviously economically makes sense. He can only control the demand side, but from the supply side, he spoke about the Russia-Ukraine issue. He spoke about China's COVID outbreak reducing and creating more supply chain bottlenecks, and the fact that his increases are just blunt instruments, and he's going to struggle to fix. Well, he won't be able to fix the supply side of things. Okay, so with that said, what do we need to watch out for, right? We've seen what he's done now, and a lot of people are quite euphoric right now, but I want to put things into perspective, because when you zoom out, we're still a long, long way from any kind of safe environment here, to be honest, here on Bitcoin. The key level going into this meeting was the 20,000. I became really nervy when a couple of hours before we were, within $100 of the 20,000 mark. Remember, that 20,000 mark is the peak of the previous bull run high from December 2017. And we really don't want to lose that. It'll be the first time crypto Bitcoin's ever done that, where it's gone lower than its previous bull market high, and that will not be great at all. So it's good to see we've got a little bit of breathing room now after this Fed meeting. If we zoom in, you'll be able to see exactly how the market responded initially when the 0.5 basis point came out, which is the first dotted line. The market started to fall, and then it picked back up as Jerome Powell started speaking, and then you saw it continue to climb when he stopped speaking at around 8:30. It's now settling itself down, and we need to watch it over the coming days. Normally we see the kind of sentiment really push through the next day once the market's had a chance of digesting what it heard from Jerome Powell. For me, the key level is this 24,058 mark here on Bitcoin. We need to climb back above here and get some consolidation above 24,000 and start working towards 28,600. The reason that's so important is that was the channel we were in here. Remember, we were in this channel, this really frustrating channel for a long period of time. We need to get back into there, and that sits at 28,600. So until then, we've got to be cognizant of the fact that this could just be a little bit of a cooling off before a bigger move to the downside. So I've continued to nibble earlier today and yesterday, and I've set limit orders for below 20,000 in case we do spike below there. I'd like to pick up some more. But other than that, from a long-term perspective, I've got to be real. I can't see any positive sentiment for us to suggest we're going to go suddenly start creating a V-shaped recovery, right, and start mooning back up. It's not going to happen. There's no, the markets are still suppressed. We're expecting a slowdown. You saw the GDP figures revised. You saw the unemployment figures revised up. You saw the inflation figures revised up. How can we suggest we're in an environment where risk can suddenly start turning on and the market start feeling confident, right? It'll be great if it does, but I can't seem to paint the picture, right? We got away with it on this FOMC meeting, and I think we got the perfect scenario to stop us from just immediately falling below 20,000, but it doesn't mean that risk is gone over the next couple of days, and we'll need to keep an eye on that. The way we can start getting away from it is getting to 24,000 and building some support here, because between us and 20,000 now, there doesn't sit any support currently, so we need to build those structures into place. Interestingly, we saw dominance, Bitcoin dominance, really start to fall today. You can see it's still falling here on the hourly candles, which is very interesting. And you've seen altcoins really start to move today. Phantom up 4.4%. You can see Phantom holding up nicely above $24, which is very interesting. Interestingly, Phantom is up 6.44% against Bitcoin today. Solana up 7.8%. Really big moves on Solana. Avalanche up 5%. 6.6% on ADA. Algorand up 7%. And altcoins are really stretching their legs today. How long this will last, not too sure. Might just be one of those weird days where people want to put some money into altcoins, but Bitcoin, Ethereum continue to be in the red, but have earned back some of that red today after Jerome Powell had spoken. So those are the key levels we need to watch out for. For me, you just need to continue to build conviction and see the course, really. I mean, the reality is nothing was announced today that we weren't aware of, right? We pretty much priced in the 75 basis point rate hike, which was good, and the market told Jerome Powell. Interestingly, December 14 projections using the CME futures have about 80% of the market, if you take these two buckets, have priced in that will be between 3.5 and 4% here on the by the end of the year in terms of the Fed funds rate. Now, if we head on over to the summary of economic projections and you look at the dot plot, you'll see the similar thing. And this dot plot is really important because it tells you where do the Fed officials think interest rates will be. And for 2022, you can see that the median, the majority here of Fed officials think that will sit between 3.25 and 3.5. That notches up the following year to the majority thinking will be between 3.5 and 3.75. Then it comes back down in 2024 to the 3.25 to 3.5 range. You then see in the longer run, most Fed officials expect us to be between 2.25 and about 2.5 for the longer run. That's their kind of neutral level they're thinking at. But this is what we expect to see over the midpoint. So it looks like the markets have priced in more than the Fed officials think. And this is interesting because it seems like the market is ahead of the Fed here, instead of the Fed being ahead of the market and really dictating where we're going to go, which is very interesting. Now, whether Jerome Powell's done that on purpose, I'm not too sure. It would be a genius move, right? Imagine where, Jerome Powell has tricked the market into telling him to increase interest rates. It's really odd. I've never seen it before where the market would have been annoyed if Jerome Powell didn't rate hike enough today. So really, we got away with that one. He did listen to the market and did the 75 basis points. And he said he's not averse to doing 75 basis points again if needed. So like we said, we probably expect another 75 basis point next meeting. Next meeting comes in at... by the way, that's BYBIT. Get yourself set up on BYBIT. I told you I do use the exchange, so get yourself set up on BYBIT. Get yourself $4,000 in bonuses. And by the way, if you sign up to BYBIT and you have deposited at least $1, you're going to enter the prize draw to win an iPad. Yeah, an iPad. Right, so when we hit 10K subscribers, I'm going to go through the list and you enter the raffle if you have at least $1 in BYBIT and you could win an iPad. So next meeting we've got now, we've had that one. That's the June one. We can lock that one away. July the 27th, we've got our next meeting and we need to see what happens here and how this evolves between now and July the 27th. Are we going to get a move up? Are we going to head to the downside? A lot of factors still to play here, but maybe, just maybe after a real big slamming, the market can start to try to level off and try to start at least going a bit sideways. That would be the first step, right? Even if we're not going to get a rally straight to the upside, at least create some stability and stop bleeding off at the level at which we bled off. Now, obviously, in terms of crypto, we know the macroeconomy is having an impact on crypto, but the reason we're at such suppressed prices is also the local issues to crypto itself, whether it's the Celsius issue, which we've spoken about at length, whether it's USDD from Tron depegging, whether it's the Luna issue we had about a month or so ago. These things weigh in on crypto separately to just our correlation with the equity market. So yes, we're down because of equity markets, but the reason we're in such a precarious position is because of damage we're doing to our own ecosystem as well. So we've got to take a hard look at ourselves. We need to make sure we're allocated in the right places, in responsible projects, which are here for the long run, and not Ponzi schemes or places which are rehypothecating or over collateralized or over leveraged. These are all common trends we should have learned from traditional finance. It's a shame people are falling for the same traps today. Naturally, these businessmen are going to be greedy and create similar businesses that did well in TradFi, even if they're misplaced, even if they're unethical. But us as investors, we need to be smarter than that. We've got the learning from traditional finance to learn about, what went wrong, what made Lehman Brothers collapse, what made Northern Rock collapse, how did these kind of banks and institutions fail, which ones were over leveraged, which ones were under collateralized, which one were rehypothecating, all these common things, which ones were Ponzi-like schemes. We should not be falling for those again. That's the whole point of crypto, is to do things different and do things better than traditional finance. So it's quite sad when you're seeing just the crypto versions of useless traditional finance products being built. Hope you guys are staying safe out there. Please do not panic sell, dollar cost averaging in your highest conviction projects, and never go all out on a dump, right? Do things patiently, do things methodically, nibble, like I like to say. Don't chase green candles, let it come to you, and let the market play out over the next period of time. Thanks for watching, guys. See you in the next one.